good morning, good afternoon, wherever you're joining us from. You welcome to another edition of Africa Fintech Podcast. We're glad to have you here today. Today is International Women's Day. We want to wish all the women across the world a happy International Women's Day. Today, we have two product managers that will be talking on a very, very important topic. I don't want to waste too much time on this. I'm going to invite the two women here, Queen and Angela, to take over from me as they introduce us to the topic of this day. Queen, you're welcome. Angela, you're welcome. Over to you, Queen.
All right. Thank you so much, Mr. Olu, for that. Once again, happy International Women's Day to all the incredible women out there. Keep being your best and in your homes, at work, and in your community. We are rooting for you. I celebrate your strength, your resilience, and your achievements. Once again, welcome to the Fintech podcast by Fintech Magazine Africa. And today I'm your host, Queenette. And we have an insightful discussion lined up for you. We will be exploring how pay as you go smartphone financing is bridging the digital divide and driving financial inclusion in Africa. Um, Access to smartphone is crucial for digital participation, but for many, affordability remains a barrier. And company like M-Copper are changing the game by offering flexible financing models that make smartphone accessible to millions. And joining me today to unravel this topic is a special guest. Drum rolls. We have Angela. We have Angela with us today, Angela Mukami Keretu. I would give Angela the opportunity to introduce herself. But before she does that, I would also like to wish her a happy International Women's Day because she's amongst the amazing women inspiring, motivating, and changing the landscape. Happy International Women's Day to you, Angela. Please, could you introduce yourself to us?
Okay, thank you so much, Queenette, for having me today, and happy International Women's Day to you too. My name is Angela Mukami. I am a product manager with experience ranging around 10 years. I've worked in a number of industries from fast moving consumer goods to the telco industries to the financial services industry for a couple of companies ranging from blue chip technologies to Safaricom to Microsoft. And at the moment, I am working at M-Copa as a senior product manager. For those who don't know M-Copa is an African fintech dedicated to delivering affordable financial and digital products to Africa's hardworking people whom we call our everyday earners. And that's primarily what I do here at M-Copa. So back to you.
Wow, I'm excited to have this conversation with you. I mean, who else? Who else is fit for this conversation if not you? I mean, because smartphone affordability is a major challenge in Africa. A very big
Yes.
challenge. It's a very big challenge, and I'm really excited. So, could you give us an overview of how M-Copper pay as you go model works, and what is the impact so far in Africa?
Okay. So pay-as-you-go models from M-Copa and also other companies who work in the same space typically works in the fashion where a customer who wants a smartphone in this particular instance will approach us and pay a deposit, a small amount, and then the remaining balance will be staggered over a period of time. It could be 6 months, it could be 1 year, it could be, it depends. And that balance is paid on either a weekly basis or on a daily basis or on a monthly basis, depending on what model the customer chooses to pay. Typically, this one, the cadence is matched to the customer's preference or to the customer's earning cycle. So, and that's usually how pay-as-you-go model works. Primarily, what we're also seeing in pay-as-you-go model, when customers come and they want a smartphone, we don't tell them to give us a collateral, like, give us a title or come with a guarantor. As we see in traditional lending, this a customer just shows up with a deposit, and a couple of just checks are done at that particular level, and a loan is advanced against their smartphone. And that's how it works. In terms of, for example, M-Copa, recently in the media, they did celebrate 3 million customers in Kenya, 5 million customers across Africa.
Wow.
So we are getting to see more and more people getting or acquiring smartphones in a way that matches their income and their level. So that's what we're getting to see.
Wow, thank you so much. Like that, you literally just made it so easy that even the layman could understand what pay as you go model means. And the smartphone is no longer a luxury; it's now a necessity for economic participation. I mean,
Yes.
the World Bank has called smartphone a necessity for economic participation. And
Yes.
many Africa countries, many people in Africa use their smartphone not only for communication, because the world is globalizing and Africa is not left out of it. We use our smartphone to access banking, healthcare, and education. And from what you just said, M-Copper is also providing this solution to the world, to Africa generally. So now, could you tell me what are the key drivers behind the success of the pay as you go model, smartphone financing in Africa currently?
Okay.
Why are you motivated about this solution, and what drives you to ensure that this covers or reaches the entire Africa and then the globe at large?
Yes, Kenneth, you did say something that was actually very, very pertinent, that smartphones are not a luxury anymore. Maybe 20, 30 years ago, smartphones were a luxury, but now every person typically requires a smartphone to do quite a number of things. And some of the several factors that we're getting to see that drive the success of pay-as-you-go financing in Africa could range from, aspects of inclusion. For example, the pay-as-you-go model is a model that is serving individuals without any formal credit histories. And these are individuals that are typically living on less than $5 a day. So when you tell such an individual to, let's say, put $200 or $300 as a lump sum to get a phone, they're not necessarily able to do that. But with pay-as-you-go earning, pay-as-you-go model, then we are getting to have them included. In the aspect of them being able to get a phone. We're also seeing another driver being flexibility, whereby the repayments of the smartphones or towards the ownership of the smartphones are typically matched towards the customer's cash flow patterns. So a customer who, for example, can be able to pay daily, then will maybe pick a daily payment plan, or choose a weekly payment plan or a monthly payment plan, or depending on how their income is coming in. The other driver that we're getting to see is the aspect of accessibility, whereby nearly half of pay-as-you-go customers are typically accessing a smartphone for the very first time. So we are getting more and more people coming into the desire to acquire a smartphone, and these are people who did not have a smartphone or have never interacted with a smartphone. So they're coming from a button phone to a smartphone, a phone with a screen where
You
everything is
can,
touch.
yeah.
Then I think the last driver we're getting to see is the inclusion of value added services, which now come as a package deal or as a bundled deal
Mm-hmm.
together with the smartphone. So when a customer is getting a smartphone, they're not only getting the phone on the pay-as-you-go model or basis, they're also getting access to cash loans, sometimes health insurance, also affordable data bundles that come as a bundled package. When the customer is getting the smartphone. So those are some of the drivers that we're getting to see as um, factors that are actually driving the success of pay-as-you-go financing in Africa.
All right. Thank you very much for that. So I would like to know, you've mentioned the traditional credit-based smartphone and
Yes.
the
Hmm.
pay-as-you-go model. Can you properly differentiate these
Yes.
two methods so that our audience can have a proper
Mhm.
understanding of exactly what we mean when we are saying the traditional credit-based model and the pay-as-you-go
Yes.
smartphone financing model? Can you please differentiate it?
Yes, sure, Quinn. So when we're talking about traditional credit-based financing, we're looking at scenarios where the customer will typically be required to bring a collateral or probably to have some formal income or at least a formal pay slip, and probably even a credit score such that the financial is then able to evaluate all of these factors
Mm-hmm.
and provide the customer a phone loan or a smartphone for that matters. When it comes to the pay-as-you-go model, this particular kind of financing is particularly designed for individuals with informal income or variable incomes. These are individuals who don't necessarily have a formal pay slip. They're just working in their businesses or as SMEs. So that model or this particular model does not require a customer to also come with a collateral or a guarantor. You just typically just show up with a deposit, and then we're able to finance, or against that deposit we're able to finance you to get the phone as you repay every day little by little for you to get the as on your journey to completely owning the phone. So those are some of the things that we're getting to see when it comes to the differences between the traditional side and the pay-as-you-go model. The level of flexibility when it comes to understanding who the customer is and actually matching them at their level. Yeah.
All right, thank you very much for that. You mentioned initially that most of the major targets are people who are using the digital phone for the very first time in their lives.
Yes.
So, what are the
Yes.
strategies
Yes.
you use to ensure that smartphone
Mm.
gets to the low income population in Africa?
Okay. So the first thing that comes to mind is being able to match the repayment cycles or having that flexibility when it comes to repayment to the level of the customer. As I did mention that in pay-as-you-go models, we have, different variables of payment. You could,
Mm,
paying weekly, paying daily, paying monthly, and this typically is matched to what the customer's income cycles are. The other thing that we're getting to see as let me see, that are making smartphones accessible to low income populations would be local assemblies. This will typically be a strategy that is a cost reduction strategy, because when phones are able to be assembled, let's say in a market like Kenya or in Uganda or in Tanzania or any other market, then they are significantly cheaper, or at least there's a level of saving that comes to that, which is then again passed to the customer,
mm-hmm.
as opposed to directly importing,
Exporting.
let's say from
Yeah.
China or any other market. We're also getting to see another driver that is causing us to have that level of accessibility against Africa is making the pay-as-you-go model more attractive. And in this in what I do mean by this is making sure that, or at least having other bundled services that a customer will be able to enjoy once they purchase the smartphone. So, and this could be, cash loans later on as they're repaying in their repayment journey. It
Mm-hmm.
could be data bundles that are significantly cheaper if they are in comparison to the customer getting them from directly from the telco. It could also be insurance, basically the stuff that we are embedding within, the digital service, just to make it more attractive and also to give more value to the customer. So, yeah.
All right, thank you very much. Considering the fact that most of your target personas for this
Mhm.
model are people who don't have um, a 9 to 5 work, or people who are
Yes.
basically in the business world and SMEs. They don't have the luxury of saying this is how much I earn every month. How do you
Yes.
assess their credit worthiness of such
Mm.
individuals, and how do you tackle that? Because I consider this as one of the major challenges we face currently in Africa, considering the fact that we have a lot of database data. We don't properly have a structure that addresses
Yes.
this model, this database model. So how do you assess the credit worthiness of these people? What strategies do you put in place in MCOPA that our audience can probably benefit from?
So, different fintechs will have different strategies on how they assess the credit worthiness of their customers. So, in some companies, they will be having their own proprietary credit assessment models that will be taking a look at the different data points that this customer comes in with. So, it could be a matter of assessing their M-Pesa statements, for example, because, for example, in a market like Kenya, most people have M-Pesa as opposed to even having a formal bank
Pesa,
account. So
yeah.
some fintechs will, yeah. So some fintechs will tell you, okay, let's just download your 6-month M-Pesa statement, and then we just get to see how that is. But most of the times, what we're getting to see in this particular space, specifically in pay-as-you-go markets or pay-as-you-go fintech companies, is that there are some proprietary, credit assessment models that, are taking the various data points, as I have mentioned, so that at the very end, there's a clear decision on whether we can be able to um, loan to a customer, or,
Make it.
on the other side, decide not to loan to a customer. So that's one of the key entrants to, assessing credit worthiness. Then the other thing that we're getting to see, as when customers when customers acquire the smartphone, they're going to be making the daily repayments, to pay off the balance,
Hmm.
because they are initially they only got the smartphone by paying a very small deposit, but there's an outstanding balance that they have to repay every day. And when they are making these daily repayments, these payments are counting towards building the customer's credit profile, so that later on, based on this their repayment behavior, then the customer can be able to unlock other additional benefits or other higher valued benefits. So that's also just a way for the customers to slowly build their credit profile, for the fintechs company to later on leverage down the road. Yeah.
All right. Thank you very much. So I was just reading about M-Pesa. I think that was a few weeks back,
Mm,
and I was actually going to
yes.
speak about it. So we've seen how
Mm-hmm.
mobile money platforms like M-Pesa have transformed
Mm,
financial access in Africa and have enhanced the financial
yes.
inclusion. But despite this progress, millions are still left out behind, probably due to the high cost of smartphones, especially using Nigeria as an example now. When we have a rise in dollar, there's a
Mhm.
significant rise in smartphone as well, because most of the smartphone we use here are being imported, right? So how does
Yes.
pay as you go financing change this narrative, and like how do they address the barrier? What are the biggest barrier that you're currently facing in customer adoption? Because yes, I know that there's been a massive impact, but I also know that
Yes.
there's a lot of work that still needs to be done to cover up, especially people at the bottom of the pyramid. And how does this pay
Yes.
as you go model address this barrier?
Okay. the greatest barrier that we're getting to see is on the affordability front, or at least one of them is on the affordability front, because as you did get to say that, especially for example, in a market like Nigeria, where the Naira can, swing, have really great swings, that will definitely affect the cost of the product. And what pay as you go model does in terms of meeting that affordability challenge is to support the customer to make those flexible payments,
Mm-hmm.
because sometimes the payment can be, okay, let's, pay 50 shillings or pay 70 shillings a day. And sometimes when we're getting to see the customers are struggling, it could be, okay, pay 40 shillings a day, pay 100 shillings a day, depending on what the customer can be able to afford at that time. So affordability is one of the challenges that we're getting to see just across all the markets, and pay as you go specifically plugs into that gap by giving the customer the ability to uh, pay small, as we call it in Nigeria, so that they're able to get the smartphone at the end of the day. The other challenge that we're getting to see, aside from affordability, is on the digital literacy. So most of our customers that are getting smartphones, as I had mentioned, approximately half of them are getting smartphones or acquiring smartphones for the very first time.
Yeah.
So then there's this whole new world of, I'm coming from a button phone to a smartphone. How does it work? How do I move from one point to another? How do I save my contacts? It's a lot just at once. And so what we're also getting to see is we barring our customers, or to support our customers to get some smartphone usage skills so that they're able to navigate the use of a smartphone. Otherwise, it can be a little bit overwhelming from a button phone, and then the next thing is a smartphone with a fancy screen.
Yeah.
I think the
Digital
last
literacy.
barrier. Exactly. Last barrier that we're getting to see is the trust in financial services, especially at the bottom of the pyramid, tends to be a little bit low. Customers
Mm.
typically sometimes do not trust the fact that, if I get to finish paying this phone, it's going to be mine. Or if I have a problem with the phone, where do I get support, or where do I get help? And so when it comes to matters of building the trust in financial services, particularly at the bottom, with customers who are at the bottom of the pyramid, then having those transparent terms are actually very important, so that the customer can know, if
Mm.
this is how much I'm supposed to pay, if I finish paying, the ownership is actually transferred to me. And also the visibility of customer care or service centers, where the customers can actually go and know that, on such and such a street, I can be able to walk in and actually be served. So that visibility, or just having that visible presence, or the physical presence, builds the trust in
Mm-hmm.
customers, because they know that, I can walk in there and I will get help, or I can call
Yeah.
this number 0722, and someone on the other line, or on the other end, will be able to help me. Those are some of the barriers that we're getting to see, or some of the challenges that we're getting to see, and how we can typically overcome them when it comes to pay as you go smartphone financing.
Yeah. Thank you very, very much
Yeah.
for that. So there is this saying that goes that the internet
Yes.
is the new electricity. I mean, it is necessary for
Okay.
economic growth with the rise of digitalization everywhere, and economic
Mm.
growth is something that we need a lot of collaboration and partnerships to handle,
Yeah.
to work with together to ensure that we achieve this goal. So how do partnership with telecom providers and financial institutions enhance the pay-as-you-go model smartphone accessibility in Africa currently?
Okay, great. Pyramid, there is a need for partnerships to come, because it's not only one company that can do everything. These collaborations with other financial institutions do get to be very valuable, or provide avenues for pay-as-you-go companies to even give more greater value to the customers. So some of the
Mm-hmm.
partnerships that we're getting to see that very well enhance the offering of pay-as-you-go smartphone financing is the giving or the offering of data bundles to customers, and this can only happen when the fintech is having a partnership with the telco, because then the fintech is able to get data bundles at a preferential rate, and then the fintech is able to pass that benefit over to customers who are coming to get the smartphone in the pay-as-you-go model. So we're also getting to see other partnerships between fintech players and insurance companies, whereby the insurance company will come and say, because you have such a big base of customers, for your customers we can be able to give them such products at a preferential rate, which again become a beneficial value add to customers acquiring smartphone on the pay-as-you-go model. So partnerships at the very end between fintechs and other financial institutions work to the benefit of customers acquiring smartphone as you go model. And these partnerships at the very end of the day will be driving the digital inclusion and the financial inclusion for such customers.
All right, thank you very much.
Yes.
So, when it comes to digital inclusion, I think you mentioned that a
Mm,
couple of times while you were speaking.
yes.
Um,
Yes.
has the smartphone accessibility, let's say
Mm.
the last 10 years, has it improved digital inclusion in Africa? And what can you say would be the next, what should be our expectation with regards to digital inclusion in Africa in the next coming years with regards to smartphone accessibility?
Okay. So smartphone accessibility, specifically under the pay-as-you-go model, has been one of the key contributors to getting more and more people into the digital economy. So it is hard for us to talk about digital economy without us talking about smartphones, because how are you going to access the internet if you don't have a device that you can connect to the internet? And so smartphone
Exactly.
accessibility, yeah, smartphone accessibility within the pay-as-you-go model is one of the key drivers, what we're seeing as an enabler for people to actually join the digital economy. So specifically, for example, with companies like Copa, recently in the media, they did celebrate, getting to 5 million customers across Africa. So these are 5 million customers who at one point, probably half of them did not have access to a smartphone, and now they do have access to a smartphone. Or the percentage that maybe had a smartphone upgraded to a better smartphone, one with better storage, better memory. So we cannot underscore the importance of pay-as-you-go financing to getting customers introduced to the digital economy, because if customers cannot be able to access a smartphone, then it is highly unlikely that they will be able to access other levels or other subdivisions of the digital economy. So, yeah.
All right. So that's really profound, and that's. But could you give us a scenario or a use case whereby smartphone ownership has transformed a community or a particular region in Africa?
Yes. Okay. I can talk about specifically what I have seen with my agents in the field, and what I have gotten to see is that for the sales agents who do get to work with the pay-as-you-go companies, they're getting an opportunity to have gainful employment. And the fact that when they do get to sell a smartphone, or when they do get to successfully pitch a smartphone to a customer, then they do get to earn the commissions, and a way for them to get out of poverty, and a way for them to put food on the table. So every time I do go to the field, I do get to see that, and I do get to hear stories of young men and women who have transformed themselves by just at the very least being a sales agent and just selling the phone, and at the very end of the day they know I'm going to get some commission money to, meet my basic needs. So I've been able to see that quite often, or at least in the field when I do get to visit my sales agents. I'm also getting to see customers who, once they get a phone, then, something clicks within them and they're like, oh, now I can use this phone, for WhatsApp business,
Mm,
to communicate with my customers, to take photos and, post on my WhatsApp status. So they're now getting to use smartphones as a tool to get them to have some economic advantage, and, to position them to, get more customers. Just the other day I met another customer and at one of our service centers, and he wanted to be a rider, or he's a Buddha rider, but he wanted to ride for one of these ride hailing companies, the likes of the Bolts and the Ubers and the whatnot.
mm,
And, he needed a smartphone because a customer will send you a pin on Google Maps and expect you to navigate to get to them or to deliver the package. And so we were having a conversation on how um, the smartphone was going to be an enabler for him to get more jobs or more opportunities with this company, so that he can be able to efficiently deliver to customers who are not necessarily in his locality, but because now he has access to a smartphone and he can access the Google Maps, he can be able to go to those places. So we're getting to see smartphones as drivers of economic activities, and supporters of avenues where customers can be able to get more money and to get to be viably employed or gainfully employed.
mm. Yeah, that's very, very correct. While
Yes.
you were sharing that story, um, I just it just dawned on me that indeed the pay-as-you-go model and the smartphone accessibility in Africa has changed the landscape of not just our knowledge base, but has also impacted our careers and our individual lives. So while you were speaking, I just thought about the default rates in Africa, and there's this simultaneous equation between the rise in digitalization in Africa and then the default rates in Africa as well. Could you speak to how the pay-as-you-go model ensures sustainability and prevents default rates from skyrocketing in Africa?
Okay. So when it comes to default rates, what we're getting to see is that customers will default when they feel like, or when they're faced with scenarios where they have to make the payment, but they feel they cannot be able to make the payment at that particular time, and so they will tend to default. How pay-as-you-go models usually combat this is by making the payments very flexible. And this is what I mean. If today, for example, I get to miss a payment, I will be able to I can be able to catch up with my payment tomorrow, or when I do have something in my pocket so that I can pay for me to use the phone. So that level of flexibility is something that works well for the customer, or works best for the customers, because then they're able to know that with my repayments being flexible, I can be able, when I have money, I will give some bit of it towards my loan, because it is essentially a loan, for me to be able to then continue enjoying the benefits of the phone. Also, the other thing that we're do getting to see is that when you offer customers the opportunity to, return the phone in exchange of the deposit that they
Mm-hmm.
paid, some of them will actually take it up, because they will be like, okay, I'm in a financial jam in at this particular moment, or something has happened that has disrupted my income, but I have the option to return the phone, and then the company will give me my deposit back. So such kind of arrangements then do work well to the advantage of fintechs that are offering, pay as you go financing for smartphones, because what that means for the customer is, at the time when they are back on their feet financially, they will come back with the very same deposit, and get another phone and continue with their, paying for that particular device. So I think the key differentiator when it comes to smartphone financing in pay-as-you-go model is the flexibility angle, because then the realities of the everyday earners keep on shifting from, day in, day out. And if the companies or if the fintechs are able to match this particular realities, then the default rates actually do get to be a little bit low.
Oh, right. That's very very correct. In the sub-Sahara Africa region, the sub-Sahara area of Africa, the average cost of a smartphone is about 40% of a person's monthly income, and I mean that was the report from the GSMA Mobile Economy Reports as of last year. So one of the biggest barriers to smartphone adoption is costs. And beautifully,
Yes.
M-Copper is bridging this gap. Report shows that in the sub-Sahara Africa, a smartphone can cost nearly half a person's monthly income, as I stated earlier, and that's a tough choice. When you think of
Yes.
other requirements for life, such as food, clothes.
Yes.
So
Mhm.
how does this M Coppers bridge this how does this make it easier for them to decide? Because while you were trying to explain earlier, when you mentioned that you can decide to return the device in case of a default, in case of you have a challenge or an issue with your business for the
Yes.
SMEs, you can decide to return and then have a loan. So how does MCOPA actually make this easier? And what policies or regulations do you think we need to further support this smartphone penetration in the underserved areas of Africa?
Okay. Okay. Um, so when it comes to the realities of our customers getting phones or customers who want a smartphone, the realities on the ground is that the little income that they have has competing needs, as you rightfully put it. And all of this are important to the customer when either it's food or rent or school fees or any other need that they have to meet at that particular point. Smart pay as you go smartphone financing, I think the greatest benefit that um, pay as you go smartphone financing has typically comes from the fact that customers are able to pay one, little payments until they finish. Two, they're able to match that particular payment or the repayment that they're supposed to do to their income. So if my income today, for example, I know I can be able to spare 100 shillings a day, I will take a smartphone that I can be able to pay either the 100 or less than the 100. So again, having the different types of phone models that we're getting to see being offered by the smartphone companies, having the different price points allows a customer to be able to say, I can pick a low tier phone, or I can pick a mid tier phone, or I can pick a high tier phone based on what I earn, or what I sell, or what the business that I do, and what I can be able to set aside to put towards the phone. So having or giving the customer the ability to pick a small deposit or a deposit that matches their particular earnings,
Mm-hmm.
and a repayment period that also matches their earnings is something that works towards smartphone pay as you go financing, because the customer will just say, hey, I can afford 60 shillings per day or 100 shillings per day, and based on that, that's there's the phone tier that they can be able to pick and move, and rather contribute towards getting the phone to be fully owned by them. There was a second bit of your question. Please remind me, Kunet.
Okay, so the second aspect of my question was based on what policies or regulation do you think we need, yeah,
Yes.
in Africa?
Yes. Okay. Great. I look at regulation in twofold. So the first one could be regulations that support the local assembly of phones, because when fintech companies are able to, buy the phone in parts and then they come and assemble the phone locally, the costs typically do get to be a bit more
Mm-hmm.
cheaper on one side, and on the other side, the local assembly does get to have an angle of employment, because the factory assembly or the assembly factory needs people to actually assemble all this, so it also becomes another win-win for the government as well as for the masses of people that require the smartphones, and they can only afford them in the pay-as-you-go model. In instances where local assembly may not be a viable option, then the other angle where regulation can come is the fact on could be on touching taxation. So at the moment, if when companies import a fully made phone, then there are so many taxes that are attached to that particular phone just coming into the country. So yeah, this could be phones that are particularly very important for people to get into the digital economy, but because the taxation can be anywhere from 8% VAT, or to 16% VAT, some markets even 20% VAT, and there are also all other taxes that are loaded on that smartphones, then it makes the cost of the phone, which, as we did say, is actually a necessity and not a luxury, to skyrocket.
Mm,
So when it comes to matters of where governments can be able to support, it could be in those two angles, creating opportunities for businessmen, fintechs, to provide phones locally by locally assembling them. Or in the other instant, it could be, let's look at the taxation. How much are we taxing smartphones? Because everyone now typically needs a smartphone, to do their business, to communicate, uh, to be literally a participant in the digital economy. So how can we as governments then, reduce some of this cost so that everybody or citizens in a country, get to have a smartphone? Yeah.
all right. Thank you very much. I could see the audience engaging and have like two questions. I'll just quickly take the one from Mayor, then we'll take
Okay.
one from Talihun very soon. So, Mayor is asking, do clients have insurance on the phone in case of theft and damage?
Okay, yes. So again, different fintechs will have different arrangements. For example, a company like Mkopa will offer insurance for the phone against theft and also against things like the screen breaking. At least there is a warranty that the customer can be able to get a replacement phone should there be something that happens to the phone, and they need a replacement phone. So yeah, that's what we're also getting to see. Yeah.
All right. Okay, so Talhan is asking, what about payment currency types? Are there challenges? For instance, I'm a Nigerian, and I know that M-Kopa operates in Nigeria, right? But
Yes.
there are also other African countries that I am sure that M-Kopa is yet to penetrate. So I believe this question he's trying to ask them, how do you handle payment currency types? How do you
Okay.
currently handle payment currency types, especially for the African countries where M-Kopa is not currently operating in?
Okay. So in the case of Mkopa, we operate in 5 countries in Africa. At least our website also talks about that. And in the countries that we do get to operate, we operate in the local currencies of, those markets. So in Kenya, we operate in Kenya shillings, or at least our customers make their repayments in Kenya shillings. In Nigeria, the same. Our customers do make their payments in the Naira. So each market, we do get to use the local currencies that our customers are typically transacting with day in, day out.
All right. Thank you very much. Okay, I could see the audience really engaging, and I'm super, super excited. I mean, it shows that they are enjoying this conversation. So, today is International Women's Day, and I would like us to speak about financial inclusion impact on female. So, how does the pay-as-you-go model smartphone financing contribute to closing the gender gap in financial inclusion? Do they contribute in closing the gender gap? If yes, how do they do it?
Yes, yes. Definitely pay-as-you-go smartphone financing is a player or an enabler of female customers or women who want to get smartphones. What we're do getting to see is that there are reports, for example, like a GSMA report. This was probably 2023 that talks about women being 28% less likely to own a smartphone than men, due to various reasons, and affordability was one of them. So when we look at how pay as you go then plugs into this gap is that it offers women an opportunity to acquire smartphones at payment terms that are tailored for them. So if this woman or female customer is able to pay, 50 shillings a day or 70 shillings a day or 100 shillings a day, then there is a particular gadget or smartphone device that they can be able to access at that particular amount or price point because that is what they can be able to afford. Again, it builds on to the greater conversation of affordability because customers are of women, for example, in reference to this question, may not necessarily have $300 all at once or $250 all at once to buy a smartphone in lump sum. So but this small payments then will be able to help the women or at least position the women to be able to get a smartphone that they can then be able to use for their own empowerment. Connect?
Hello, Angela. Can you hear me?
Hello? I, I can hear you. I can hear you, Connect.
Uh,
Mm.
okay, sorry about that. Okay,
Yeah, it's okay.
yeah. Okay, so can you please? I was asking how you were talking about the GSMA reports. That was the last one I heard. Then my internet cut me out.
Oh, okay. No worries. I can take that again. So I say that there's a GSMA report, I think it was for 2023 that talks about women being like 28% less likely to own smartphones
Mm,
than men due to different barriers, and one of them being affordability. And when you look at how pay as you go can then fix that or can contribute to that, then pay as you go comes in the form of offering women an opportunity to acquire smartphones at payment terms that are tailored for them. So the woman or the female customer will then be able to, pick a device at a price point that they are comfortable to committing to, whether it's the 50 shillings or the 70 shillings or the 100 shillings.
okay.
So that opportunity that is proposed by the pay-as-you-go model then becomes an enabler for the female customers to be able to, get the
Yes.
smartphones and participate in the digital inclusion conversation. Mm.
All right. I can see Talihan's question. He said, "How about in Ethiopia?" I'm not sure what exactly he's asking, but he's asking how about in
Yeah.
Ethiopia.
Oh, at the moment, at least for Mkopa, we're not in Ethiopia market. There could be other players who are looking at Ethiopia market or who operate in Ethiopia market. I may not be aware of them, but I'm pretty sure in every market there is a need for pay-as-you-go smartphone financing because our customers at the base of the pyramid, are across Africa. So yeah.
Okay, so what
Mm.
unique challenges do women face in accessing smartphone and in digital financial services? So, what challenges
Okay.
do you think women in Africa face with regards to
Yes.
accessing smartphone?
Okay. The first one would be affordability because women specifically are at the bottom of the pyramid or in rural Africa. Most of the income is being controlled by the men or by the patriarchal
Mm,
societies. So then it would be a bit hard for a woman to just all of a sudden have $300 that they're just committing to a smartphone in a lump sum. So affordability is one of the key challenges that we do get to see women face when they're trying to access smartphones. The other challenge that we're getting to see is the digital literacy barriers. We are seeing that women would typically probably require more support in terms of getting them to be at a level for them to operate the smartphone at a more comfortable level. Sometimes it can also stem from the fact that some of the women are not as schooled as the men, especially in societies where the sons would be more educated than the daughters, then it would mean that the women in this particular case would then have a little bit of a challenge in just trying to understand,
trying to.
how a smartphone works, how things work, how a text message is sent. So some of those things are some of the challenges that we're getting to see um, women experiencing when they are trying to access smartphones. And yeah.
All right. So, are there
Yes.
specific programs or
Mm.
initiatives designed to support women acquiring smartphone? And for our audience listening, like Eunice, are
Yes.
there specific
Yes.
programs?
Mm-hmm. So we are seeing, partners or, institutions like the Bill and Melinda Gates Foundations, that fund, research and the testing of solutions to connect more women to affordable financial and digital projects that can advance their livelihoods. We're also getting to see, especially, for example, when the women get the phones, um, in the apps that could be there, embedded in the phone, there could be some modules or some courses that are in very simple English or very simple language to help the women upskill, to give them more digital literacy. So we're getting to see those opportunities come up, and at least providing the women an avenue for them to be able to, one, you know get more knowledge, how to use a smartphone, what else they can do to the smartphone for the smartphone to become an economic driver for them. And as well as I mentioned, partners like Bill and Melinda Gates are actually doing a lot in this space, just trying to see how we can get more women to get, more smartphones, more women in the digital economy, more women to be financially included. So yes, we're getting to see those partnerships come strong. Mm.
All right, thank you very much, Angela. This has been really and it has been an enlightening conversation, and we've explored how the pay-as-you-go smartphone financing is the making Africa digital access more inclusive. It's ensuring that we have an alternative credit scoring, and then enhancing the future of a mobile financing in Africa. Thank you very much for being a part of the FinTech podcast. I don't know if you have or would like to share any final thoughts or advice for the fintech innovators looking forward to build solutions in this space, especially for Talahon, who is listening from Ethiopia and probably could be considering building a solution like this. So, what would be your advice, or what are your final thoughts to our audience? Why we call it a wrap?
Yes. Oh, thank you, Quinette, for having me today. My final parting shot would be to encourage fintechs and also the participants on this call who could be, our next fintech drivers to understand the realities of everyday earners, because they make up the greatest percentage of, the bottom of the pyramid. And if we're able to understand their realities, and we will be able to come up with more innovative solutions that will meet their needs. And if we're able to do this, then we're able to further drive, the digital and financial inclusion, to get these people, to be part of that conversation. So, yeah, that would be my parting shot, Quinette.
Thank you so much, Angela, for sharing your expertise with us today. And to our listeners, thank you for tuning in. If you enjoyed this conversation, do not forget to subscribe, to follow Fintech Africa, Fintech Magazine Africa, and to ensure that you stay tuned. We're bringing lots and lots of lots and lots of engaging conversation from the FinTech magazine. I'm still your girl, your host, Queenette. Thank you. Until we see you next time. Bye for me and Angela. Bye, guys. Thank you. Angela, bye.
Bye. Bye